Market Daily Live Forex Market Outlook by Trader Plato. Introduction. The purpose of the market outlook is for us all to have an elite mastery of the forex market to an advanced level. The forex market is a decentralized market that runs 24/7 from Mondays to Fridays. It has a market capitalization of approximately $8 trillion daily. Dominant and non-dominant market participants. At the top and in the middle of the hierarchy, we have the dominant market participants. That is the central banks and the large financial institutions. At the bottom, we have the non-dominant market participants. Those are the retail traders. In a nutshell, the dominant market participants make up of 95% of the market participants, while the remaining 5% are the non-dominant market participants. Those are the retail traders. This is according to research and data from the Bank of International Settlement, the Bank for Central Banks. Market mechanics is a unique hybrid trading strategy that utilizes technical and fundamental constants to generate accurate trading signals. Power of 3, AMD chronological order. On Fridays, we have the accumulation phase. On Mondays, we have the manipulation phase. On Tuesdays, Wednesdays, and Thursdays, we have the distribution phase. Therefore, we do not trade on Fridays and Mondays, as these are the accumulation and manipulation phase of the market. Power of 3, AMD chronological order. The Asian session is the accumulation phase, the London session is the manipulation phase, and the New York session is the distribution phase. So we do not trade the Asian session, as this is the accumulation phase, but we are allowed to trade the London session since it sometimes overlaps with the New York session. Power of 3, candlestick pattern order. Unique candlestick reveal mass psychology that symbolizes the power of 3, the accumulation, manipulation, and distribution. Below are the images of the candlestick showcasing the mass psychology and movement of the market. We have the bullish and the bearish candlestick patterns. Liquidity and trap zones. All the market concerns about is liquidity and nothing else. Liquidity is basically points in the chart where majority of orders are pending to be filled. Thus, liquidity is the energy of the market. Without liquidity, the market will not move. These zones are as follows: yearly high and low, monthly high and low, weekly high and low, daily high and low, swing high and low.
Yeah, welcome to the chat on the daily market outlook. So let us take less than a minute to explain candlestick patterns for those who are new. Right here, as you can see, price rallying down and creating a cluster of white candles. These white candles, they signify selling pressure. While right here, as you can see, price rallying up, creating a cluster of green candles. These green candles, they signify buying pressure. These green candles, they signify buying pressure, while a price that is neither green nor white, like this candle here, that has neither color, like this candle here, it signifies indecision in the market. So in the market mechanics, we look out for liquidity and trap zones. These are zones that offer the best opportunity to either buy or sell. And right here, we only look out for the strongest signals that the market is possibly going to generate. We need to know that the first question that should come to mind of every trader is the fundamental question that where is the money? Because money moves the market, and a trader who can successfully answer this question is rewarded massively by the market. So now, to answer these questions, we must be able to identify liquidity zones, which are also support and resistance, as well as the possible reaction of price at these zones, so we can anticipate moves that will be beneficial to our trading account. We need to know that liquidity zones, they offer the best opportunities to either buy or sell. They offer the highest risks to reward and the most minimal risk per trade. So right here on USD JPY, we can see the first half of the Asian session, price printed a bullish pattern, a bullish candle, and the second half a sell candle at the high of the day. So this is an invalid setup. We ignore such setup like this. On AUD JPY, at the first half of the Asian session, we can see the sellers in this zone, and the second half, we can see the buyers grabbing liquidity and playing out a classic AMD. This such kind of pattern we do not ignore, and this means that price is likely going to break the high of yesterday and rally further up. On USD CHF, we can see a sell candle at the low of the day. So following from this, we expect the buyers to raid this zone, grab liquidity and ride price further up in an impulsive manner, breaking the high of the day and breaking the high of yesterday. Then we can conclude that the US dollar is going to strengthen against the CHF. On Euro USD, you can see at the first half, you can see the sellers in this zone, and the second half, you can see the buyers manipulating more sell orders and grabbing liquidity, riding price up. This is a textbook clear pattern, and we expect the high of yesterday to also be broken and for price to rally further up. And fundamentally, today is the day of distribution, which means that market sentiment is likely going to be positive. And mind you, we use the 4-hour chart for analysis for the sake of clarity. Pardon, on USD CHF, the analysis I did was on the 1 hour, which is meant to be 4 hours. I just realized this. And right here, we can see this support here. And this is a weak support. In my opinion, we expect the support to be broken later in the day, as it did not form at the expected area. On AUD USD, you can see a classic AMD playing out, as we have the accumulation in this zone, the manipulation and distribution to the upside. So we can expect AUD to ride further up, break the high of yesterday, and for price to push higher. On GBP USD, you can see a classic AMD playing out. You can see the accumulation, manipulation, distribution. So later we can expect this to rally further up, break the high of yesterday, and ride further up. On NZD USD, a similar pattern to GBP USD, as these are correlation pairs, and you can see a sell side liquidity for a buy. Mind you, you need to keep this concept in mind, that the market buys to sell and the market sells to buy. Why does the market do this? The market does this because for sellers to make money, they need to take money away from buyers. Likewise, for buyers to make money, they need to take money away from sellers. So the market has to generate orders to the downside, grab liquidity as much as it can, and move in the intended direction. And this is what we can see playing out on NZD USD. This is a sell side liquidity. Buyers induce more sellers, and price goes against them with 1 or 2 candles, and we can expect price to shoot up, break the high of yesterday, and ride further up. However, you need to know that in the market, nothing is cast in stone, and all analysis are nothing but the perspective of the operator analyzing the charts. On USD CAD, we ignore this analysis as we have a sell candle at the high of the day. On Euro JPY, we ignore this analysis as this is a bullish candle at the high of the day, so we can expect more buyers to be manipulated to the upside. Liquidity should be grabbed and price should ride further down, breaking the low of the Asian session. This is the Asian session in this box, which is the first trading session of the day. These 2 candles. On gold, you can see gold is jumping up, and we expect a buy side liquidity for a sell. However, that is not playing out. and we ignore this pair. On GJ, we can expect a buy side liquidity for a sell. When to know when to expect a buy side liquidity is when you see a buy candle at the high, and when to know when to expect a sell side liquidity is when you see a sell candle at the low. So let us analyze this cryptocurrency BTC USD. We have an indecision candle at the low, so we ignore this setup. Let us analyze the DXY. On the DXY, we can see a beautiful classic AMD playing out. We have accumulation of buy orders, manipulation of more buy orders to the upside, and a distribution down. So we can expect the low of yesterday to be broken. This is not a strong support, and we can expect the DXY to ride further down. So if this plays out, this signifies a weakness on the US dollar pairs. Plan your trade your plan, and most importantly, manage your risk and emotions. I wish you a peaceful week ahead.